time to be alive, hey? So this was the sell-off here on, this is the euro dollar. Right? This was Putin escalating the war in Ukraine with announcement of conscription. Funnily enough, as soon as he did that, all the planes leaving Russia sold out, not surprisingly. Anyway, so that happened to the euro, and the US dollar also reflects that move, and the market traded pretty much sideways, a little bit weaker till the FOMC and the raising of the rates and by 75 basis points, and the dot plot showing that we're going up to about 4.4%. But the market then listened to his presser, which started here, and he was kind of on the fence saying, we're in the bottom end of the restrictive range that we want to be, i.e. we're close to the peak. However, the market is pricing in that the recession is going to hit sooner, and interest rates are probably peaking sooner, and so up we go, sell off the US dollar. Then they realised, no, this he actually means it this time, and we're rates for higher for longer. So down we go again, and that's just a clear indication of the volatility around major news items and why you should be avoiding them if you're unused to trading them. And certainly you'd want to have a pretty fast connection to the market if you're wanting to try and trade that kind of news. So expect, we're still getting the lower lows, lower highs in the euro dollar, and I expect we're looking at 95 in this cycle, and probably 95 would be maybe the overall cycle low of this trend. Looking at the US dollar itself, it's pretty strong. Maybe 95 is not that. Maybe 90, that's another 300 pips. It's quite an extension in this run. If we put a fib extension on it, see what's about there. So 95.3 is 2 times 96. We might be looking around somewhere in here as the bottom of this run, but 95 is certainly a well talked about target for the euro, and that's just a bit lower than that. So we might get a cycle and then another cycle down to 95, because we are getting close to being that exhaustion level. And looking ahead on the calendar, there's not much to drive news. We do have a busy day for today. Today's volatility is far from over, but when we look at the calendar, the Fed don't meet in October. Their next meeting is November the 1st and 2nd, but we'll get the US inflation in the middle of October, so that would give us time for this to cycle down, come back up in the middle of October, and then we'll get that another bullish run on the US dollar. That's kind of what I'm thinking where the market's going to be going. Stocks, well, stocks had a fun time. Here's the 15-minute chart of the S&P. Initially sold off on the FOMC release, rallied on his comments, and then started to puke and is still heading lower. In fact, I might just jump in on that because I think we're going to be going a lot lower anyway. Gold pretty much sideways, same with oil, a little bit weaker. Looking at the commodity markets overall, certainly still tracking lower. Wheat's a little higher, but the idea of inflation starting to bite is certainly affecting, and the global growth will starting to slow down, certainly affecting the commodity markets, which in turn will have a deflationary effect. And now the question is how far will the Fed go to fight this inflation, and will they go too far? Somebody did ask him that in the presser, and he said it's too hard to answer hypothetically, so he dodged it. But he did say that we're expecting a weakness in jobs, jobs to go up to sort of 4.5%, and so the bond market surprisingly a little weaker off that, off the presser, excuse me, and hasn't really bounced, but we expect that to have that effect. This is not going to be linear. You will have a retracement, and yeah, I think that's pretty much about it for today. I think the overall picture is buy US dollar dips. As we get to overextension, you want to be cautious trading US dollar out here. Wait for it to come back and buy the dips, and with stocks, continue to fade them. Yeah, we'll be going lower. Thanks guys, and best of luck.